good morning. Welcome everyone. We will start in less than 2 minutes. Please stay with us. A very warm welcome to everybody for joining us today at our webinar on mitigating COVID-19 trade finance risk. The webinar is organized by Asian Development Bank and hosted by International Chamber of Commerce, United Arab Emirates. Our speakers include Stephen Beck and Nana Horodze from Asian Development Bank and our own expert, Vincent O'Brien, Director of Icc Uae. The webinar will be for 1 hour, and now I'll hand over to Stephen Beck. Over to you, Stephen. Thank you.
And now, we thought it would be a good idea to bring you a webinar on operations in these unusual times and the sort of peculiar risks that we can experience during this particular pandemic. We had Vincent O'Brien do such a seminar just for our team to talk about some of these issues. We found it extremely helpful. Many of you probably already know Vincent. I would say that Vincent is probably the best trainer in the world in trade finance. He can take what's often can be a rather dry subject matter and make it quite interesting and entertaining, as you may discover over the next 60 minutes or so. But more than that, Vincent's been involved in writing a lot of rules for trade with the International Chamber of Commerce. He's been involved in lots of arbitration cases, court cases involving trade finance. So Vin brings a very particular set of skills and experience to this subject that we think that you, our partners, our clients will find interesting. So with that, I'll turn it over to Vin, who's going to talk about risks and how to mitigate those risks in this particular environment. And then at the end of that, we're going to do sort of a Q&A. And Vin, with that, may I give it over to you, please?
Sure, Stephen. Thank you very much, Stephen. And thank you, Habib, for Icc Uae for hosting it. I'm so happy to be here presenting with Stephen, Habib, and here we go. So everyone, you're very, very welcome to this webinar. I'm going to keep it as practical as I can. I'm going to base it on scenarios and issues that have arisen over the last month or two in terms of blockages or challenges in the supply chain. But I think even probably more interesting for you is blockages or challenges for the supply chain, not just because banks deal with documents. So I'm going to run through a presentation, and Habib, if you can allow me to share the screen, I will open up the PowerPoint and then we will actually move forward. So now sharing my screen, and I hope you will actually find mitigating COVID-19 trade finance risks. And basically, to set the scene, we are here as the ICC, the International Chamber of Commerce. In just 10 seconds, the ICC is the World Business Organization, but the most important thing about the ICC is our members. We work by using international rules applied all over the world, and it's through our members that actually we craft these rules, operations people who are dealing with the business day by day, and that's why the rules work. But now here we are today, we are looking at the world, and a world that has been challenged in terms of trade. When we came to the end of last year, of course, we had many challenges. We had basically the trade war, protectionism, a decline in investments, and trade was already under pressure. Trade was already under pressure, and then this year along came COVID-19. And COVID-19 has had a dramatic effect on what's happening in terms of trade and actually trade finance. And before I go any further, Habib, if we could put up maybe one poll question. It has been projected that trade this year could drop by a large amount. So I just want to put up a poll question asking you, what do you think the drop in trade may be in this year, 2020?
So we are going with the poll question 1 on your screen now.
Here we are.
Have 10
so
seconds.
what do you expect?
Yeah.
Sorry, Habib. What do you expect to be the drop in global trade, Habib?
We have coming result, and now we will be closing in 3, 2, 1, and we will close it now.
Very interesting. Yes, Habib, thank you. The result coming through is most people, of the many participants on today, think it'll drop between 20 and 30%. The World Trade Organization projected a little while ago that the drop could be anything between 13% and 32%. But I'm actually with you. I don't think it's going to be 32% or even anything like it, but I think we could see a drop of 20%. So in the context of global trade trends, that is really a significant drop. So what are we doing about it? The ICC issued a guidance paper on the impact of COVID-19 on trade finance transactions based on subject to ICC rules. So a lot of the examples I will present today will be based on this guidance paper or derived, but actually I will also be bringing you some cases I've dealt with myself. So moving forward, the ICC also brought out a memo to governments and central banks regarding steps to be taken to safeguard trade finance. So these documents are quite important and we will make these available to you a little bit later. But this is not unprecedented. We had something a little bit like this before. So you may remember in 2010, we had the volcanic eruption in Iceland. So it was kind of unique in 2010 with the volcanic ash, but banks stayed open. It didn't affect banks being open, but we found that goods were not able to move by air. There was a delay. And of course, the impact on documents when banks deal with documents was actually very significant. But actually, the good news is this was my moment of fame in my life because I appeared on the BBC 1 Minute World News when I was trying to travel to Beijing for the ICC Global Banking Commission meeting hosted by China. But here I am at the airport. So I was the last person left in the airport, or basically I should say I was the last person to be removed from the airport. So we're in another situation where banks are open or part open, but the supply chain of goods is actually impeded, or the supply chain of documents is actually impeded as well. So now getting a little bit more practical and referring to specific issues from the guidance paper. Everyone is talking about, on your screen, you should be able to see the force majeure clause, which was actually crafted by the ICC. So not going into detail, but to get a full force majeure event, an event that prevents or impedes a party from performing. So ABC, the impediment must be beyond reasonable control of the parties engaged. It could not reasonably have been foreseen, so it's unexpected, and the effects of the impediment could not reasonably have been avoided. Now, trade finance professionals know in ICC rules, we don't like the word reasonable, but anyway, that's another story. So force majeure and the impact on trade finance rules are instruments issued subject to ICC rules. Well, the most common one we think of is a letter of credit, and you don't need a lesson on letters of credit, but just for 1 minute, just so we have a focus on the issues, please allow me to take you through this. On the left-hand side of on the left-hand side of my screen, I see the lady, very nice lady, the supplier, the exporter. On the right-hand side, the importer, different countries, different jurisdictions, different law, regulation. Exporter doesn't ship because they want to get paid first. Importer doesn't pay because he's worried about getting the goods. Letter of credit provides a balance, a bridge between the seller and the buyer. You all know this, but just to get us focused. They agree on settlement by letter of credit as a compromise. Applicant applies to issuing bank. Issuing bank issues the letter of credit to advising, nominated, and perhaps most likely confirming bank. So ADB, of course, would facilitate the confirming bank added their confirmation, but we leave ADB aside for the moment, okay? So we have a letter of credit confirmed in favor of the exporter. Exporter ships, presents documents, gets paid, everyone happy. But actually, everyone is not so happy in recent times due to challenges put forward by COVID-19. So I'm going to give you some scenarios, and the first ones are so easy, but they only take 10 seconds. Second one is easy, but then they get more serious, and they get engaged in disputes that are involving our issues regarding millions of dollars. But let's start and keep it easy. Scenario number 1. Now this is just so easy. Here we have our letter of credit. Exporter receives the confirmed letter of credit. Scenario 1. Goods shipped, documents presented. Bank examines documents, confirming bank examines documents. So when the documents comply, the bank, and I just would like you to put in something in the chat, the bank must, very good. Yeah, I can see everyone seems to, well, everyone knows the answer of this. The bank must pay, or someone says pay, and I'm just going into the chat here. Just see, I'll tell you what you're saying. Must pay, payment made, you all know. So just closing this again for a moment. Yeah, bank must pay. Fantastic, pay, excellent. But that was just too easy. Now we move on to our second scenario. Scenario number 2, okay? Sounds the same. Goods shipped, documents presented, documents don't comply, bank. And I know this is too easy, but we're getting there very quickly. And again, refuse payment, non-payment, bank don't pay. Okay, bank don't pay. Oh, and someone said bank no obligation to pay. Okay, just to say, this is actually interesting. Someone said non-payment, someone said no payment, someone said no obligation to pay. Well, of course, the last one I mentioned is the correct one. Because in normal circumstances, the money is usually paid, but usually is not good enough, really, because in a challenging situation, if the bank has no obligation to pay, well, then maybe someone will not get paid. Very good. Scenario number 3. Now it's getting more interesting, I hope. Great. Oh, I have a question here, but I'm going to come to it a little bit later. Scenario number 3, goods shipped, documents not presented to confirming nominated bank before expiry. So documents not presented to confirming nominated bank before expiry. Why not? You should present them. Oh, there's a reason. As bank closed, there's a lockdown in the country, so the bank is actually closed. Its business is interrupted. So the guy has shipped. He has the documents, but he just can't get into the bank to present the documents before the expiry date because the bank is closed. In a word or two, can you tell me what happens? And I know it's very, very fast, but put in a word what happens, okay? 1 or 2. Okay, we're getting lots of responses here. Yeah, lots of responses. Okay. Yeah, that's right. Okay, great. I just give you what they are. Okay, lockdown. Again, no obligation to pay. Payment deferred. Well, payment is not deferred. Make a presentation. That's a good idea, but I might say no. And if I say no, I say no. And someone has just put in, it's not the words I would choose, but actually your words are very good. Someone has answered, beneficiary cannot present the documents. Tough luck. And actually, I wouldn't use those words. They're your words, but actually, they're the good word, the correct words right now. If the exporter cannot present these documents because the bank is closed under a commercial letter of credit subject to UCP, interruption of its business, tough luck for the exporter, okay? The letter of credit has expired. Now, that doesn't mean he doesn't get paid, but that means the risk is really high due to the answer you gave me to the preceding question, no obligation to pay. This is a common problem right now, but the next one is even more interesting and actually more common right now. Great, LSP's expired, finished, okay? Oh, someone has put in email to issuing bank for consent, okay, to send electronic documents. Now, just to slow down, because this is really important, I can send an email to the issuing bank requesting consent, and of course, you'll follow it up by SWIFT. But don't forget, the benefit of a letter of credit is an undertaking of payment before shipment. Now the goods are shipped. You have no undertaking of payment whatsoever as a beneficiary. Now, in most cases, the applicant will want the goods, but where are the goods? The applicant will want to pay, but there is no obligation to pay. Scenario number 3. Scenario number 4 is of more interest to our banks. And, still on scenario 3. This is Article 36, force majeure, UCP. But I'm not going to go into it right now, but I might come back a little bit later. But please absorb it on the screen while you're looking at it, because there's always a question about this article. Okay, scenario number 4. Okay, yeah, and lots of people on here. Scenario number 4, the goods are shipped again. The documents are presented. Oh, we got lucky this time. The documents comply. Great news. The confirming bank checked the documents comply. Good. But this now has become a really common problem due to the COVID-19 situation. Documents comply, but now the documents are stuck. Now, stuck, what do I mean? The documents are stuck in the confirming bank because the courier companies are not picking up documents. Or the second example is the documents are stuck in the courier company because the courier company picks up in one jurisdiction, but they're not traveling to another higher risk destination, or maybe there's a lockdown in one area, there isn't a lockdown in the other, and this situation is actually evolving where depending on where you are, there may be a lockdown, the lockdown may be opening up. But here's my question, because it's a real one. Money is on the line. Goods shipped, documents presented, documents comply at the confirming bank, documents stuck as courier not collecting. So ultimately, the documents will probably not get to your issuing bank. And I see we've friends here from many countries, and I see we've quite a few from Bangladesh. And Bangladesh is a good pointing question, okay? So the documents don't get to the bank in Bangladesh until after the credit is expired. Eventually, the courier picks them up. So what happens? What's the obligation of the issuing bank? And here we have it coming in on the chat. Oh, wow, I have 15 responses. Right, okay. Issuing bank should extend validity of LC. Yes, that's a nice point. Should, but I don't know. They should, but maybe they won't, okay? Okay, someone has said credit expired, no obligation. That's interesting. Of course, credit expired, no obligation. Yeah. Well, let me give you the correct answer because I've been involved in 2 big cases relating to this. And let's be crystal clear. Someone said extend the LC. There is no need to extend the LC. Okay. Someone said no obligation. That is not actually correct. So let's be crystal clear. I said documents presented to the nominated confirming bank before expiry. If they comply, even if they're stuck in the bank and the credit expired, but they were presented to the confirming bank before expiry, issuing bank must reimburse the nominated bank. So the presentation of the complying documents to this confirming or nominated bank is the trigger for the obligation of the issuing bank. And someone has asked me to go into more detail, but I'm not going to right now because I want to move on, but I may come back time permitting a little bit later. Bank should pay issuing bank LC. Why doesn't the confirming bank? Okay. Why doesn't the confirming bank ask permission from the issuing bank? You don't need to actually. If the documents are presented to the nominated confirming bank, issuing bank must reimburse even if the documents are stuck. And please, I'll be happy to give you more detail on this later because lots of people have questioned. Oh, someone has said exactly. Okay, totally correct. And someone else is smiling, so I guess that's a good sign. Scenario number 5, getting a little bit more complicated, just a little bit more. Okay, and think of it, millions of dollars involved or another currency. 5, goods shipped, documents present. Documents comply. So sounds like a good story here. But now the documents are sent, but due to the problems with transshipment, courier companies, etc., the documents get lost in transit. My gosh, they don't even get to the issuing bank. They never, ever get to the issuing bank. So not talking about delay, the documents never get to the issuing bank. So what is the situation here? Okay, an issuing bank never gets the documents. Well, issuing bank issues a letter of credit or is undertaking to pay against documents. Well, I guess if I never get them, I don't have to pay. Now, I'm just prompting thought here. I'm not actually saying that. So what's your reaction? Okay. Very good. Article 35 of UCP protects the beneficiary. Excellent. Very good. Again, Article 35. Issuing bank has to pay per UCP. Another tricky question. Well, it's a tricky question, but most of you have given me the answer to the tricky question. The beneficiary and the nominated confirming bank are protected by Article 35, which expressly covers the situation if the documents get lost in transit. So to be clear, documents delayed, documents lost in transit, but presented to the confirming bank, nominated bank within the deadlines, which is expiry date, place, presentation period, issuing bank must reimburse. Okay. And that, of course, is if the documents comply. But someone said to me earlier, remember I mentioned I had a question, but I come to it. But someone said, what about if documents don't comply? So, okay, now let's move on. I will answer the question. Moving on to scenario number 6. Goods shipped. Well, every letter of credit is kind of the same things. LC issues, goods shipped, presentation. So this is real. Good ship, documents presented before expiry date. Excellent. Documents don't comply. So now the documents don't comply at the confirming bank, okay? But due to lockdown, or lockout, maybe it's more correct, all the guys in the bank have to go home and there's a little bit of confusion, or maybe the letter of credit was available with the issuing bank and in your country there was lockdowns, you had to go home, leave your documents on your desk and do your best to work from home. So what's happened here is goods shipped, documents presented before expiry date, documents don't comply, and we know a letter of credit is undertaking to pay complying presentation. The documents don't comply, but the guys did not refuse within the 5 business, no, not business, banking days. So what's the result for the bank? Okay, but of course there's lockdown, force majeure. So force majeure, people say, can let you escape your obligations. But I'm just interested in what you're saying, and I'm looking at the chat again. Oh my gosh, I have so many responses. We have 5 on this one. Article 16, very good. Article 16, obligation to pay. Someone said discrepancy, don't pay. Actually, sounds logical, but sorry, not correct, okay? Under the UCP rules, and we're talking about the rules, we see UCP on every scenario, up on the right, top right. Under the UCP rules, if the issuing confirming bank, Article 16, as you have referenced, very good. If they do not refuse by close of the 5th banking day, they are precluded and must pay. This is actually happening right now, okay? Happening right now. So this is also a very, very important scenario. So moving on, I'm going to go on to guarantees, but you know, this one has actually prompted my thought here. So Nana, I'm looking at you on screen and you came into my mind magically. So I'm just thinking of this case here and the one before where there's an issue with the issuing bank where they have to pay, but they didn't even get the documents maybe, or didn't get them yet. So I'm sure, you know, I'm just wondering, have you had any issues, challenges, problems in the context? Because of course you're covering these transactions, you're covering the risks of the issuing bank, for example.
Yeah, I'm sure you know better what's happening in the industry, but for the trade finance program, I think we did not have significant issues. There was, when the pandemic started, I think because people had to shift to the work from home arrangement, it was unexpected for lots of banks, including me, to be honest. So sure. I think because they had to shift, there were a couple of instances where we faced delays in processing of documents. You know, responding to requests, submitting some documents internally to ADB, but that was sorted out in a couple of days. So I can't say that we faced any issues. So far it's really processed smoothly and without any delays or any issues. I don't know what's the situation on industry overall, but in trade finance we did not see any issues.
Sure, that's really excellent. And that kind of, despite the bumps and the challenges, overall the system is still working extremely well, well. And of course that's due a lot to the goodwill of the parties who are actually involved. And so much letter of credit and trade business is kind of repeating business with counterparties who have been engaged for a long time. So the level of trust is high. So people are going that extra mile to do what they can to make the transactions work. But there are exceptions. And of course, the exceptions are where something has gone wrong, okay? Something has gone wrong. And Stephen actually mentioned the dollar going down. Of course, that this is having huge impact on some of the parties, but that's another story. So thank you very much, Nana. That was really, really helpful, a very helpful insight. So now I'm going to move on to guarantees a little bit and some of the issues that have surfaced under guarantees, if that is okay with everyone. Everyone? Yeah, everyone seems happy enough. Okay, now, on my guarantee scenarios, again, real cases, real stories. They get a little bit more complicated as they go, and I've many of these, but I'm just going to share kind of the most common ones. Number one, guarantee scenario. Complying demand made to the guarantor before expiry of the guarantee. So demand made to the guarantor before expiry, okay? But due to lockdown, bank is not open for trade business of any sort, okay? Of any sort. So the bank trade finance department is closed. So what happens when the bank is open later? So basically the presentation got into the bank, but maybe it was examined, maybe not examined, but definitely not paid because the guys are trying their best to work at home. There is a backlog. But what is the implication for the guarantor bank? And if you could put your answers into the chat there again, that would be great. Yeah, the implications, great. Okay, and yeah, the answer to this one again is okay. Check. Too bad for the bank. Okay, check whether the claim is valid or not. It shall pay anyway. Okay, let me stop there for a moment. There's many answers coming in, but they're kind of the two key ones to focus on. Someone said check whether the claim is valid or not. Well, I would do that. I would also do that. So that's good advice. But actually, the second one is bank must pay is really the correct one. But your point is good. I would check whether the claim is valid or not. But presented before expiry. Again, if this was URDG 758, if the bank has not rejected by the close of the 5th, not banking day, 5th business day, okay? But in this context, it's the same. Bank must pay, obligation to pay, URDG, okay, URDG. Okay, someone has actually said URDG 758 and the bank, URDG, someone has actually made a comment just to share. Someone said URDG allows for a 30-day extension, or 30 calendar days extension, okay? And that's a very good point to make, but it doesn't apply to this case because the beneficiary managed to actually get the documents into the bank before the expiry. But if a bank's business was interrupted, as you're highlighting, okay, and they could not present, there is a very valuable extension in URDG. So thank you for making that extra valuable comment, okay? Yeah, someone has said, as documents already presented, this does not apply. It does not apply, but it's very good advice and something we need to remember. Scenario 2 on guarantees, and our timing is still good. Non-complying demand made to guarantor before expiry, but due to lockdown, the staff are working from home, but does not reject the demand until the bank reopens 10 days later. Okay, well, we kind of covered this one because of your comments on the first one. So basically, non-complying, so the demand does not comply. It's not complying, okay? But it arrives in the bank. But due to lockdown, the bank can process it. Guarantee expires. Well, you all know the answer to this one right now. So we're going to just look at the chat, okay? Reject the demand, someone has actually say if it does not comply, okay? Okay. But due to lockdown, the staff working from home, so they weren't able to. So yes, someone has answered it here. Again, the bank has an obligation to pay under the rule. Now, there's something I haven't talked about yet, and that is the possibility of legal intervention by the courts. I've just answered in the context of ICC rules, how the rules apply, but sometimes the courts can intervene because someone takes a legal action. I hope I didn't sound like saying illegal action. Someone takes a legal action. And as you all know, if there is kind of a conflict at the end of the day between the applicable law and the rules, even though the courts take the rules very seriously, if there is a contract, the law will prevail. Okay, third scenario, scenario number 3. And I'll slow down for this one. And this is a case that just unfolded this week. I won't say any names, but it unfolded this week for me. So I want your guidance. I want you to help me. Okay. Beneficiary makes demand under local guarantee. So it sounds to me there's a counter guarantee from one country to the local guarantor. The local guarantor, based on the counter guarantee, issues the local guarantee. That's what happens every day. Now the story. Beneficiary makes demand under the local guarantee, which complies. Excellent, okay? And it didn't say it in the query, but I guess they paid. They check it, they examine, it pays. But then the local bank cannot demand under counter guarantee, cannot make demand under counter guarantee as local bank is closed. Oh, I thought it was going to be as counter guarantor is closed, but this is really interesting. As the local bank is closed due to lockdown. So I guess the documents are stuck in the local bank who already have to pay or have paid. But then here's the question, by the time the local bank is open, and many are opening up again, some of you, my friends, from certain countries, I spoke to you last week, and you were telling me your bank was opening the next day. But by the time the local bank opens, the counter guarantee has expired, and the bank says, we will not be paying due to force majeure. The government has declared a force majeure, okay? So we will not be paying. So I'm asking you, first of all, under ICC rules, what is this position of the local guarantor, not to the beneficiary, because we've covered that, has paid or must pay, but if they cannot present under the counter guarantee, have they a problem or no problem because it's a force majeure? And remember, if it's millions of dollars involved, sometimes, occasionally, these things can get challenging. And now I'm looking at the chat, trying to look at the chat. Yeah. And oops. Yeah. Okay. Very good. Very good. Now I'm going to slow down here because this is really important. And this is a real case this week. And it's very big. And it's between one very big country, I won't say the name of the country, and a smaller country. And that smaller country, someone from that country is on right now. So maybe it's even your question. So here is my answer. But again, I'm not always right, okay? Not always, okay? So in your chat, I asked, what is the position of the local guarantor vis-a-vis or in context of counter guarantor, okay? As the presentation demand complies, counter guarantor must pay. Interesting. Someone says bank has no obligation, I guess that is for short, no obligation. So the counter guarantor has no obligation. That's 100% different than my last answer. Next one is local guarantor can still present the demand under CG terms within 30 days after cessation of force majeure. Okay, now that's very interesting. Okay, that's very interesting. If the beneficiary, but it's not actually correct exactly. Okay, if the beneficiary, and right now in this story, the local guarantor is the beneficiary under the counter guarantee. Okay, so it's not that there's a force majeure on the counter guarantee. It's that the guys in the local bank just cannot send it because their bank is closed. So it does not apply. But you would be correct that if they could not present to the counter guarantor due to force majeure, well, then there will be an extension. So that's excellent advice. Okay. And then I got a point here came up regarding ISP 98. What's ISP? Someone type in for me to remind me, what is ISP? That's for standby letters of credit. Okay. Yeah. Well, someone asked the question, how was demand, just go back to our scenario, just to make sure I cover everything. How was demand made to the local guarantor if the bank is closed? Well, just to be clear, but it's a good question, a very good question. The demand was actually made to the bank. Okay. The bank is open, but then the bank closed. And the guys had to go home. And that's actually the scenario we're facing. Now back to ISP 98 is for standbys. And I'm asking, would the answer be the same if it was ISP standby letter of credit confirmed by the local guarantor or the local bank? Well, then the answer would be different. The answer would be the first answer we got. If it was a confirmed standby and the documents complied, presented to the confirming bank under the confirmed standby, well then presented within the deadlines that are applied, then the issuing bank, because this time it will be a standby, the issuing bank, confirming bank standby would have to pay. So yes, you're correct, we would get a different result. Okay, and someone said tricky situation, and yeah, I think we'll have more questions on this one. But as I said, this is just this week, so it's not actually finalized yet, but your input has been really valuable. Now to move on just a little bit further. Okay, and when I move on, I want to go back to the COVID-19 guidance paper from the ICC. Now in this guidance paper, as you know, it talks about, it introduces, makes people aware of the force, very nice way. I think it's very well done. Then it focuses on ICC rules. And I want to make a very strong point to all of you right now, because I hear so many crazy things about force majeure and that banks can apply force majeure to avoid payment. And there are a few, not many, thankfully, a few legal cases underway regarding this. The key thing I want to make clear to you In the ICC force majeure rules, as they are called, but I would not call them force majeure rules, but that's what they actually have in their heading. We have UCP, URDG, URC, URR, EUCP, URBPO. What I want to highlight is that in the context of force majeure and bank's obligations, the focus is very tightly on interruption of the bank's business, UCP, interruption of its business, URDG, URC, interruption of bank's business, URR 725, interruption, EUCP, URBPO, interruption of an involved bank's business. Now, I don't want to focus on EUCP or URBPO right now, but just to say the key thing is interruption. So the most common manifestation of interruption, the most common, now not the only one, but the most common one you are experiencing is that the actual bank is actually closed, okay? And then going back to ISP 98, which someone brought up in the chat, but I escaped at that point, but now I want to go back. Under ISP 98, there is no, it just references with the situation if a bank is closed, or interruption of its business. So if they're not present within the deadlines in an ISP standby, well, then there's a very protective provision in that for the beneficiary, in that it is extended for 30 days after the bank reopens. Now, to give you, I don't want to go into detail, but during the 9/11 situation in the US, this rule protected many banks and many beneficiaries. And as a result, the incidence of use of standby letters of credit has increased dramatically, okay, in the last 10 years, very dramatically. And I just have to ask you a question about commercial letters of credit, if you don't mind. And please answer in the chat, okay? Our commercial letters of credit, which we're kind of talking about mostly now, are commercial letters of credit volumes, or should I say issued by SWIFT, IMT 700, is the trend that they are increasing slightly because risks are going up and letters of credit are good for risk. And Habib, I think you have a poll question on this. You appeared on my screen. Maybe you could run that poll question, please.
Yes, so we have poll question number 2, and we will launch it now for 10 seconds for the reply.
Are commercial documentary letters of credit volumes being issued globally? And we look at the SWIFT figures, I guess, increasing, decreasing, or are they pretty much?
Okay, so we will close it in 5 seconds. 5, 4, 3, 2, 1, and here we go.
Okay, that's interesting for me. Now, if I take the constants and the increasing, we are kind of 50%. So our answer is kind of 50-50. Okay, yeah. That's a safe place to be if you're 50-50. And just to give you the facts and figures, that from SWIFT figures over the last number of years, issuance of commercial letters of credit are actually in decline. And don't hold me to the exact figure, but about 3 to 4% per annum. And my expectation is the figures for 2019 will soon be in the ICC Global Trade Finance Survey. My expectation is still actually going down, which is an interesting thing to think about. But a thing to think about in another seminar is that the volume and value of standbys are going up. And ADB uses a standby letter of credit to cover the risk on these type of transactions, and your business is actually increasing quite dramatically. So a very interesting place to actually be, a concept to think about. Now to move on just a little bit further, and our timing is good. I will be talking for about another 7 minutes, if you can take that. Okay. I got an email regarding a query regarding force majeure, but the force majeure is regarding a contract. So I'm going to just read out the email, and then I'd like you to, if you can, in the text, tell me what you think. I know you can't answer a complex question in just a few words, but just it would be good to get your interaction. I got an email, and the email was about a problem, a big problem. CIF named port of destination force majeure. So a lady called Ashley sent me an email, and I'll just pick you the key things. Problem. The COVID-19 is problematic for us. Well, I think it's problematic for everybody. We shipped on the basis of CIF, named port of destination, Incoterms 2020. Okay. The goods were loaded on the vessel at, I have made it blank just for confidentiality, port of loading, port of shipment. They're on the vessel, bills of lading are issued, shipped on board at the port of shipment. For destination, port of destination It could be a port in your country. In fact, it was a port in one of your countries, okay? The problem is that due to lockout, maybe that should be lockdown or lockout, maybe a lockout due to a lockout at the port of destination, the goods could not be unloaded and the buyer is suffering acute delay in delivery of the goods plus demurrage. This is a big problem, okay? Still is a big problem, but it's loosening up now. Okay, so the buyer can't get the goods. Okay, now no one mentioned the letter of credit here, so I don't know. We're just talking about the contract. The buyer, if I was the buyer, I wouldn't want to pay it, to be honest, if I can't get the goods. Okay, but I have a contract. The buyer has holding back payment due to force majeure or port of discharge, which he says is unexpected and beyond his control. We're hearing these words so much these days, driven by state-driven lockdown for health purposes. What can I do as the goods not delivered until, and we will lose payment rights? I wonder, has anyone just any comment or give some good news for, doesn't mean she'll get her money right, give her some good news, maybe. She's worried the buyer is not paying because the goods cannot be delivered. Any feedback or any comment on it? Very good, yeah. Oh, what? Yeah, we have comments. Oh, okay. Well, here someone said LC dealing with documents and not with goods. Now, I said there's no. This is not an LC question, but you are absolutely correct. If it was an LC and the documents complied, all of this non-delivery, etc., of the goods is irrelevant. So, good comment. But this is about the contract. Okay, excellent, excellent. I won't say the names of the people, but excellent answer. Someone said the goods are delivered under CIF when they are placed on board at the port of loading. So the good news for actually coming from you is that, well, you may still have a problem with your payment, but you don't have the problem you think you have because you have already contractually delivered the goods under CIF when they're placed on board, notwithstanding the other problems. So thank you very much. That's absolutely fantastic. CIF delivery at loading. Someone asked me difference between CIP and CIF, but I'm not going to go into that right now. We will deal with that maybe later on. Now, my dear friends, we are nearly there. So remember, I mentioned these are operational issues, but also I mentioned that sometimes there can be a legal issue turning up. And I'm not going to make you read all the text that I have on my screen on my screen right now. But let me, and I have a few questions that have come in here that I need to address. I'll come to them later. Okay. We dealt with the rules. We talked about operational cases, not everything, but there have been a number of cases in the courts already. And here is an interesting one. Indian court dismisses COVID-19 related force majeure claim. Okay. Now, you don't need to read it, I'll tell you. There was an exporter in Korea, South Korea, and the importer is in India. Now, I'm stating the country right now. That's terrible. I shouldn't state the country. Well, actually, I'm stating it because this is a good news story, and this is the way it should be done. Okay. So it was a story a bit like our previous one where the goods could not be unloaded at the port of discharge. The buyer is actually claiming that he has a contract. I have a contract. The contract has a force majeure clause. This is a force majeure. So now we want the obligation of the bank terminated as unforeseeable on account of frustration, impossibility, and impracticability. So there is a force majeure, so the importer doesn't want to pay. He doesn't want the bank to pay the letter of credit. But actually, when it was heard in the Indian court, this case was dealt with extremely quickly and efficiently when Justice S.A.A. Syed stated very clearly and very correctly, this is a letter of credit. Letter of credit is an independent transaction with a bank, and the bank is not concerned with the underlying dispute, even if it is a force majeure, even if there is a force majeure clause in the contract. UCP, credit by their nature are separate transactions from the sale or other contract on which they may be based. Banks are in no way concerned with or bound by such contract. So I hope you found that case interesting, and any other question or comment on that case, just in case you feel, and I will be able to share the full judgment with anyone if it wants it. And I got to mention before this seminar about another case in India that I just want to talk about briefly. And there's yes, just let me, oh yeah, one here. Yeah. Oh, someone has asked a question. I nearly said the name, and I know I'm not supposed to, but I didn't. Someone asked a question, a very good question, because this was a letter of credit, so the court did the right thing. Okay. So someone said, what happens if not an LC? Okay. If it's not an LC, then we're back to the contract. And right now, I don't know what the Incoterm was, just in this case. We were talking about a letter of credit. But just to answer your question, let's imagine it was a CIF Bombay contract, because it's India. I'm imagining, this is just your question. If it was a CIF contract and the force majeure lockdown in Bombay, the goods cannot be cleared and the guy wants to avoid his payments, well, the exporter would still be in a very strong position under Icc rules. I cannot say 100%, but very strong position, because that exporter would say, yes, I agree, it's a force majeure, but the goods have been delivered. And he said, no, we can't take delivery. A little bit like our previous story. No, the goods were delivered when they are placed on board the vessel at the port of shipment, and I can prove it. I have evidence, and that evidence is the shipped on board the named vessel at the port of shipment. So I hope that's it. Someone asked me about the other case in India. I nearly said China. I did say China, actually. Okay. And now then I will be actually finished for one or two questions if you have them, or comments from our other speakers or from you. I was asked about the Yes case. Well, the Yes case relates to a bank in India called Yes Bank. And again, this is in the public domain. Okay. So people are talking about it as though we should be a bit nervous about India. Well, this case for me is underlining the courts in India treat this very seriously. But the Yes case, people are saying we should be careful. And yes, there is a Yes Bank case. And in that case, okay, a court issued a court order, injunction, stay order to a bank. But that stay, and there was a letter of credit issued by the bank. But that stay order, to be very clear, because people are reporting it incorrectly, that stay order was stopping the issuing bank from debiting the account of the importer. That stay order did not stop the bank from paying the foreign nominated bank, which it did. So in the context of our work, this case is not really relevant. That's regarding the importer and its bank. It's like the importer having a loan with his bank. It's a local thing. The bank did not intervene in the bank's letter of credit obligation to a foreign beneficiary or a foreign bank. So basically, I think I am done, Stephen. And I really appreciated the participation of all the participants, which was excellent.
No, it's great. Well, you inspire that, Vin. So, Vin, you've made it really clear that, of course, you've reminded us that trade finance is based on documents, and that during this crisis, where we've had courier companies sort of grounded at various times, or certainly not operating in the normal course, it's more difficult to sort of move those documents to bank parties. And also, of course, even if they do get to the bank, people are working at home, like me. So it's created an issue. What do you think of the sort of ICC's guidance or workaround for that particular sort of weird problem in this zombie apocalypse, involving the sort of the scanning of documents and then emailing those? And what do you think of that, and the sort of potential impact around fraud risk?
Yeah, well, the fraud risk is a big one, and it's kind of an exception, and so I might talk about that separately. But on day-to-day operations, I've been involved in so many situations where actually I'm lucky guy. The questions I get asked and answered, most of the participants on this can answer them already. They're answering them. But just to be clear, you know, there have been many cases where the documents went to a confirming bank, but then they couldn't get to the issuing bank. And that's kind of the key one you're talking about, okay? And people didn't know what to do. But then there was direction, which was kind of like this to the issuing bank, which sounded a bit abrupt. Sorry, but even though you're not going to get the documents, under the ICC rules, because they were presented before expiry, you still have to pay us. And then, of course, this is kind of shocking for an importer and their bank. What? We still have to pay, even though they know the rules. But then this is where all the workaround, if you have a solid foundation, then you can build a solution. So then, of course, the solution was, well, you have to reimburse us under the rules, and let's not go there. How about we provide you with the documents electronically, send them by PDF, we send you an authenticated SWIFT, and this then went into high gear and surprisingly has worked extremely well. I won't say every circumstance, but extremely well. So it has kind of taught us that it is possible to move to electronic documents, okay? Electronic documents. Now, to go on a little bit, and I don't want to open up a pet subject, you know, but everyone keeps talking about bills of lading, documents of title, how important they are, you know? Well, I don't want to say they're not important. They are important. But we need to be a bit more practical. In most cases involving trade finance, there's a usance period in the transaction. Not all, some are side. So banks saying they're relying on bills of lading, you know, you can't. In a bank in Bangladesh here, when you get the bills, when the bills of lading arrive, the goods need to be cleared. So by the time you would want to use that bill of lading to protect yourself, the goods are already long gone into the supply chain. So at last, we're beginning to focus on practicalities that may not be perfect, but once you have the base idea, it can be done. Right now, for example, I'm working with a bank in China and a bank in Africa, and we are using electronic documents for air shipments. I'm not doing it for bills of lading, but air shipment, the airway bill is really only a receipt, evidence of goods being shipped. And of course, we're only doing it for counterparties, and actually I'm getting to the fraud question. We're only doing it for kind of counterparties and banks that already have kind of been doing business for a number of years, but that's a huge part of a bank's book. So if you can start doing it for the lower risk transactions and you gain the expertise and the experience, well, then you can start slowly, carefully moving out into the more risky transactions. So finally, so for sure, you know, for original documents, and we don't really know the counterparties. And someone said to me, Mr. O'Brien, the Icc says that we can take electronic documents, are recommending we take it. And I'm the confirming bank. I'd say, sorry, we cannot do it this time, unfortunately, you know, cannot. And I'd say no more. But I wouldn't do that for the regular counterparties. I know the transactions, I know the nature, whatever. Then we can find a solution. So we have now taken a first significant step in digitalization, and it has worked. So now I think this will bring an opportunity to do more. Hope that made sense.
Indeed. Thank you, Vin. So I see that it's we've got 2 minutes. Unless there's something burning, Vin, do you want to mention one more thing before I do my little closing spiel?
Yeah, you brought it up with a specific question, which was really welcome, Stephen, because it's a very important one. But I have a question here just about digitalization. What do I think? You know, generally, and that's a huge thing. And my advice is that when you're trying to do anything, go for the easy wins first and apply them. So, for example, I'll ask another question. I like question. What country in the world, and actually there's participants here from this country, quite a few I can see. What country in the world is the biggest issuer of letters of credit by SWIFT, MT 700? Now, most people think of a country starts with the letter C, but actually it's not that country beginning with the letter C. Oh, there is. Thanks, Nana. Yeah, you're keeping me alert here today, Eugene. Yeah. Oh, Bangladesh. Oh, someone said Turkey, Bangladesh. Someone said Turkey, Bangladesh again. Well, you all know the answer. And it's interesting. The biggest issuer of commercial letters of credit in the world by SWIFT is Bangladesh. Bigger than China, bigger than Turkey, bigger than Korea that came up here. Okay. Number one. As I said, trends are going down, but actually, interestingly, 2019. SWIFT issued LCs in Bangladesh are still going up, which is amazing. Okay, if you're trying to digitalize all of this letter of credit thing with so many parties, it's going to be a long game. But there's something that can be done that would have huge impact. In Bangladesh, for example, so many LC applications are in paper. They go to a branch, they go to an issuing bank, whatever. It is not that difficult to get technology that will do all of the issuing parts straight through. Applicant, issuing bank, issuing, and then advising of the LC to the beneficiary. That is an easy win. And that would have huge positive impact on a country like all countries, but on Bangladesh. And then as you go, then you do the other things. You pick the easy transactions first, and then you move out into the complicated. I hope that kind of gives you my take on digitalization.
Yeah, thanks again, Vin. Just a few thoughts to close. This crisis has reinforced, I think, a few things for all of us. One is that this business is ripe for disruption, right? I mean, the prominence of paper in this business is crazy, and we need to deal with it. And to the previous question, of course, digitization is the answer, and we all need to move forward on the digitization agenda. It'll make global trade and supply chains a lot more secure. It's something we have to do. Another thing that I think has been really good, and Vin, and you were around. You've got the white hairs or not to remember the global financial crisis like me. We're so much more organized as an industry today than we were then. And I think that that's really been a very important part in us being able to coordinate, cooperate with each other, demonstrate flexibility where there have been issues around documents not being able to get to where they need to go and all that sort of stuff. So that's a real testament to all of us. And I think that with the role you play, Vin, and these kinds of forums, and thank you to Icc Uae for helping us to facilitate this, to be able to bring the industry together and talk about these issues means that we're going to be able to work things out a lot better when there are issues. That's going to mitigate our risk, and that's going to help us keep trade finance flowing, which is going to help keep trade moving, hopefully increasing in the very near future, and creating the growth and jobs that we need to dig ourselves out of this crazy mess, which of course we will. So I'd just like to thank all of you for participating. And Vin, thanks once again for playing such an important role in explaining some of these issues to us and bringing all your experience to help us chart a course forward. Thank you.
Thank you for the opportunity, Stephen.
Thanks, Anna. Thanks, guys.
Thank you. Bye-bye now, everyone. Look forward to seeing you. Bye-bye.
Thank you very much.
Icc Uae makes it possible. Founded in 1919, our mission is to make business work for everyone, every day, everywhere. The International Chamber of Commerce, United Arab Emirates.